Have you ever looked at your bank account at the end of the month and just wondered, where on earth did it all go? Well, you are definitely not alone in that feeling. Let's dive right into this explainer and demystify the methodology behind a 90-day financial reset. We're going to turn what might seem like a really overwhelming tracking process into a simple, incredibly easy to understand system. Seriously, if you've ever felt completely stressed out by where your cash is flowing, this system is explicitly designed to transform that anxiety into absolute clarity. We're going to walk through this step by step together to unearth exactly how this methodology builds lasting money awareness. So, here is our roadmap for today. We're going to hit the 90-day money reset, taking your money snapshot, finding hidden money leaks, the daily tracking habit, weekly and monthly reviews, and finally, life after the reset. Let's jump right in. Section 1. The 90-day money reset. Core structure and routine. Now, this explainer is based directly on the 90-day money reset journal. It's a premium tool designed specifically for tracking spending, resetting your habits, and really building up your money awareness. You might be wondering, why use a physical journal instead of just, firing up a spreadsheet? Well, it all comes down to simple psychology. Unlike a cold, intimidating spreadsheet that just automatically crunches the numbers for you, a physical journal actually forces you to slow down. You have to physically process your financial decisions on paper. And the beauty of this source material is that it's not trying to give you rigid tax or investment advice. Instead, it serves as this guided personal finance reflection tool focused entirely on self-awareness, organization, and tracking your actual behavior. The entire system is anchored around this one specific number, 90. Why 90 days? Because it breaks down so cleanly into 3 months or 13 weeks, giving us a solid repetitive structure to work with. But honestly, more importantly, research consistently shows that it takes months, not just days, to rewire deep-seated habits. A 90-day window gives you enough runway to stumble, recover, and still see massive progress by the end. The material really emphasizes that you absolutely do not need perfect numbers to begin this journey. What you truly need is just the willingness to be consistent. So the system relies on this clean, 10-minute money reset routine built on 5 highly actionable steps. First, you start with your snapshot. Next, you choose just one main reset goal, like maybe saving a bit more or reducing a specific debt. Then you complete one daily page and you review every single week. But the most important step, number 5, continue even if you miss a day. It is so incredibly easy to fall off the wagon and just throw your hands up, but this reset is all about awareness and ongoing action, not perfection. You just pick the pen back up tomorrow. Section 2. Taking your money snapshot. Seeing the full picture. Okay, if just the thought of logging into your bank portal makes your heart race or your palms sweat, take a breath. The journal explicitly reminds you right away that perfect numbers aren't required yet. Estimation is perfectly fine. We just need to see the landscape. The absolutely crucial point here is that you do not need everything calculated down to the exact penny to begin. This entire process is designed to be empowering and completely non-judgmental. You just need a rough sketch of the full picture before you start hitting that reset button. You'll capture these current money numbers to see the full landscape before you reset. This helps identify your main money stressors right now. You're going to list out your monthly income, your savings balances, bills, total debt, and your average flexible spending. But here's the kicker. You also have to identify a spending category that feels totally out of control. We all have one, right? Whether that's late-night Amazon hauls, grabbing takeout coffee every morning, or those spontaneous Target runs where you walk out with a cart full of stuff you didn't plan on buying. You pinpoint 3 specific places you want to improve over the next 90 days. Section 3. Finding hidden money leaks. Auditing your subscriptions. Before the month even kicks off, you create what's called a planned money map. You are essentially giving every single dollar a specific job title, whether it's assigned to bills, groceries, transportation, or debt payments. Mapping it out like this lets you see the intended plan versus the actual reality of your spending. The journal also brilliantly asks you to look ahead and consider what specific events might make the upcoming month difficult. What kind of support or boundaries are going to help you actually stick to this map when life inevitably gets busy? Now, a massive part of finding those hidden leaks is the bill and subscription audit. I mean, we all have that one streaming service we pay for every month, but honestly haven't watched since last year, right? This audit forces you to literally list out your recurring subscriptions, confront the actual monthly amounts, and consciously decide whether to keep or cut each one. It's a remarkably simple exercise, but it creates instant cash flow by making just one quick cut today. Section 4. The daily tracking habit, 1 page a day. Every single day, as you log your purchases, you are going to categorize them to contrast necessary expenses against discretionary desires. The daily spending tracker asks you to log the item, the amount, and literally check a box. Was this a need, a want, or did it go toward your goal? By forcing yourself to physically check that box, marking a purchase as a need or a want, you introduce a micro moment of friction into your day. And friction is exactly what stops bad habits in their tracks. It takes mindless spending and suddenly makes it mindful. But here is the really fascinating part. The daily page isn't just about the math. It actually tracks your emotional state. It asks if you were feeling tempted, motivated, calm, or maybe stressed. It forces you to choose one practical reset action before the day ends. You actively document a money leak you might have noticed that day, one better choice you made, and a moment of gratitude or a win. It ties your financial behavior directly to your daily emotional well-being. And if you think about it, that is where real, lasting behavioral change actually happens. Think about it right now. What specifically triggers your spending? Is it a really stressful day at work? A certain shopping app you just can't delete from your phone? Or maybe a friend who always wants to go out to expensive dinners? You'll ask yourself this exact question from the journal to identify your most common money trigger. This isn't just a daily question, it is a vital part of the weekly review process. Because identifying that specific feeling, person, or app completely strips away its hidden power over your wallet. Section 5. Weekly and monthly reviews. Compare and adjust. So this weekly scorecard turns your daily tracking into clear, macro-level decisions. It lets you focus on patterns, those little small wins, and making one realistic adjustment for the next 7 days. You'll tally up your income, total spent, amount saved, and debt paid. But here is the absolute coolest part. You uniquely quantify the number of purchases you actively avoided and the number of leaks you found. You literally start celebrating the money you didn't spend just as much as the money you saved. It completely flips the psychology of budgeting right on its head. Then, at the end of every 4 or 5 weeks, you hit a monthly checkpoint. Think of it like a financial pit stop. You pull back, look at that planned money map you made weeks ago, and lay it side by side with your reality. Did your savings actually increase? Did your debt decrease? Did your spending actually feel intentional this month? Taking this pause is absolutely critical for your long-term success. By reviewing what habits or boundaries actually supported your progress and what triggers caused you to stumble, you can consciously choose a much better direction for the next month. The journal prompts you to reflect on what habits or people helped you, what leaks made money harder, and then asks for a simple one-sentence summary of the month. Distilling your entire month of financial behavior into just one sentence crystallizes your progress and sets a powerful intention moving forward. Section 6. Life after the reset. Carry forward. The ultimate goal here is to turn this 90-day reset into a permanent lifestyle. You do that by building your next 30-day plan around 3 core takeaways. You don't just reach the end of the 13 weeks, stop tracking, and go right back to your old ways. No way. Instead, you isolate the one specific habit you're going to continue, the one spending rule you will confidently keep enforcing, and that one pesky money leak you know you need to continue watching like a hawk. Because old habits die hard, the journal includes a deeply psychological tool right at the end, a letter to my future self. It is so vital to capture the biggest money lesson you learned during this reset. Whether it was a hard truth about your debt, the real power of planning, or the freedom you felt from discipline, writing this short note ensures that the profound peace and awareness you've just built are securely locked in for the version of you who might face a moment of financial panic down the road and desperately needs a reminder of what they are truly capable of. As we wrap up this explainer, I want you to reflect on this final affirmation from the very end of the journal. I can build peace with money one decision at a time. It really brings the whole 90-day methodology together, doesn't it? It's not about being absolutely perfect. It's about being aware. So I'll leave you with this to consider today. Based on everything we've just unpacked together, what is the one financial decision you are going to make differently today?